What's going on with the real estate market in our area? That's the question I often get when I run into my friends and neighbors at the grocery stores or elsewhere. So here is my attempt at explaining what's going on in our local market. It is my quarterly marketing update for the real estate in the area. Folks, this is Bella Vora. I'm a realtor with Coldwell Banker Realty, and I talk about all things real estate. So we're talking today with quarter 3 2021. It has been one crazy year in real estate, and it continues to be. And what we're going to talk about today is some of the statistics, what the numbers are showing in our area. So before I even start, I wanted to explain. Remember last year we had that V-shaped recovery from when we were shut down, and then we restarted and reopened real estate. So any numbers that you see for this year, please adjust for that. Don't look at the percentages without understanding that what we had last year was not usual. It was an anomaly. So speaking of home prices, of course, that's the buzz on the streets. Everybody's like, my goodness, for the home prices. Like, even if you didn't sell your home, you didn't buy anything, you talk to your neighbors and you talk about what the homes were selling for in your neighborhood. I can tell you unequivocally that the conversation has been, can't believe what pricing the homes are selling for. And that is true. Our home prices continue to rise. Our median price, our average sales price are all pretty high. And we'll see that in the numbers in a little bit. So what happened is people's equity in the homes have increased. People have increased the wealth. What you do with the wealth is yours. It is something that you can decide. But some people have decided to sell their home and actually cash in on that equity. Some people decided to just refinance and leave it. Some decided to actually pull out a HELOC, a home equity line of credit, and make some updates to the home. Some decided to pull out a HELOC and actually invest in other properties, in investment properties and vacation homes, So that increase in the wealth, helps versus someone renting, which is why as realtors, we always like to say, don't throw money in rent. Here's an opportunity to build wealth and gain equity and, have some long-term benefits of home ownership in addition to that. So this was the equity chart and the increase in the wealth. And of course, it shows about a 20% increase. The increase varies, depending on where you live. But yes, a lot of people did see a lot of appreciation in their home values this past year. The other buzz is interest rates. What's happening with the interest rates right now? And what's predicted for the future is the question. So right now we're hovering at 3%, maybe just slightly over. Those days of 2.75, 2.8, I think have gone forever, at least for now. So what are the predictions for next year? This is something that Keeping Current Matters released. Freddie Mac is saying it's about going to be 3.7. Fannie Mae is saying, look at the last line in the predictions from each of the sources here. Fannie Mae is talking about it becoming 3.1 in the next year, the third quarter of next year, 2022. The Mortgage Brokers Association has their own predictions, and the National Association of Realtors have their own predictions. So basically, on an average, we're expecting the mortgage interest rates to go up to about 3.6% on an average. They all have their own numbers, but on an average, I think it's going to be about 3.6 to 3.7%. What does this mean for buyers? If you're looking to buy a home, here is a grid that, and again, thanks to Tom Ferry and Keeping Current Matters, I get a lot of my statistics from that resource. We're talking if somebody was able to afford a $1,700 a month payment, you could have easily, at the rates that we had a few months ago, you could have bought a $425,000 home. But now with a $1,700 payment at a 3.7% interest rate, you're probably going to be in the $370,000 range. So there is a 30, 40K difference in the value of the home you can afford with just a 0.6, 0.7, 0.8% increase in interest rates. That's pretty significant for some people. It may make the difference between being in a neighborhood or being in a school district or not. So if you have to ask the question, what is fueling this market? It's these interest rates that still continue to fuel the market. Anybody who has job security feels the need to just buy now and lock in these crazy good interest rates for the next 30 years. So given that this morning the note that I got was 3.125, that's still a pretty phenomenally good rate relative to what it's likely to be in the third quarter of next year. So for those of you who are sitting on the fence waiting to, make your decision, think about mortgage as one of the opportunities you can avail yourself of. Then that's significantly impacting your buying power. Let's see what's happening in the Chester, Montgomery, and Delaware counties here. As usual, I do business in these three counties mainly, and so I put up the stats for these three counties. Chester County is a more expensive county. Again, this average sales price dropped a little. The number of home sales have dropped a little. This is September relative to the previous 3 months average. So September, we predicted in my last update, I had said that yes, there's anecdotal evidence of the market plateauing a little, the craziness sort of dying a little bit. Still high though, still high. The home prices are high. The demand still far exceeds the supply, but we'll see a little bit of a slowdown in the pace, and that's what we're seeing. We're continuing to see that in September. Look at the numbers for Delaware County and Montgomery County as well. The median sales price, the average sales price is dropping. In Delaware and Montgomery counties, you can see that the average days on market has increased a little bit. The homes are sitting a little longer than in Chester County. And overall, the county makeup, again, these are snapshots, so don't look at them, as a be all and end all, but that's a trend. That's a trend. Our home prices remain high. Our days on market remain pretty decent, not much inventory. The demand still far exceeds supply, right? Here's Chester County again. And this time we're not looking at a snapshot for September. We're looking at the total sales for 2019, 2020, 2021. These are the 3 years, and this resource is Bright MLS, which is the MLS that Realtors use. And again, same thing, you see that the inventory is pretty low. If you notice, the sales for this year are slightly below last year. And again, remember that effect from, that V-shaped recovery where the fall was crazy good last year. But it is just slightly below. But if you compare the 2021 numbers to 2019 numbers, they're significantly higher. And remember, 2019 was one of the best years in the last 10 years in real estate. So if 2021 is even higher than 2019, well, we're seeing some really good demand in Chester County. So I like to look at all these numbers and I get excited about them, and all my resources also happen to be real estate related. It's our industry sources, CoreLogic and a National Association of Realtors and, Mortgage Brokers Association or Home Builders Associations. And I often wonder that, as an industry, we tend to create a narrative which may not. So I decided to step outside for a minute, and here's an article from a professor at the Wharton School of Business. He teaches finance, he teaches real estate, and this is an article from KnowledgeatWharton, sent to me by my husband. And the link is in the description below if any of you might be interested in reading it. But basically, the academician happens to be saying the same thing that we are. This is not a bubble, and these are the reasons why. So to quickly recap the reasons I have been talking about in my previous updates, the foreclosure, forbearance information. This year, if you look at the foreclosure statistics, they're likely to be higher than last year. Please watch because last year there was a moratorium on foreclosures. So clearly this year's numbers are likely to be higher. But you have to step back and put it into perspective and compare it to the historical data. Most of the homeowners are able to work something out with their lenders and make different payments, work something out. And of course, as I have said before, even if you have to absolutely sell your home, if you have some unfortunate circumstances, your equity should be pretty good in the home with the high prices that you're going to get. So this should not impact your credit score negatively. It should not get you into the foreclosure situation. Please talk to your local realtors. Please talk to someone in the know. Please don't despair. Don't look at all the headlines and feel, helpless. I feel very positive about a lot of these things. And if you talk to me, I'm happy to, share with you what options you have so that you don't have to go the foreclosure route. So that, just again, the knowledge at Wharton professor sort of echoing the same things that we're talking about, that the interest rates are continuing to remain low. It still fuels the market. A couple of things that we had talked about in my last update: vacation homes. We talked about people doing their, emotional purchases. Here's a pretty colorful graph of what's happening with the condo market in the country. This is sources realtor.com 2021. And you can see about six cities in Florida hit this market. And then you have Colorado, Aspen, Colorado. You have Las Vegas, Nevada. You've got Myrtle Beach. You've got all these vacation destinations, and clearly those home prices have gone a little bonkers because people are buying their vacation homes to lock in these crazy good interest rates. They pulled out equity from their current home, and that's what they've done. Another trend that I have seen, which we talk about, is the difference the difference between the demand for a rental, single family detached rental versus a attached rental. Attached means twin homes attached together, townhomes attached together. So clearly they both were, zigzagging, sort of running parallel this whole time, but suddenly the single family seems to have taken a really high trajectory relative to the townhomes or the carriage homes or the twin homes. That's a very interesting development, according to me. When we talk about buying investment properties to rent out, we talk about making it easy on yourself and buying, properties with homeowners associations, so that require less maintenance. You don't have to worry about it. But as an investor, those who had invested in single family rentals, they suddenly shot up this year. Maybe because of COVID, maybe people wanted their space. They didn't want to be in crowded areas. Maybe this is the influx from the metro areas to the suburbs, and they're out here for the greenery and for the open space and lands. So that's another interesting trend. So hope this was helpful, folks. A little bit of what does this mean for buyers and sellers? Talk to a realtor who is knowledgeable about these local statistics. Your realtor should know what the average median sales price in your folks are, what the trends are. Is it going up? Is it going down? What's happening with days on market? Talk to somebody who knows what they're doing in that market. Secondly, we want to be aware of what the future holds as well. Of course, these are all predictions, but real estate is always, always, always local, and always with what's happening in your life. People buy and sell homes when they need that in their life changes. You have a new job and you need a new home. Your family is growing and you need a new home. You want that extra bathroom or the bedroom or the garage or the backyard, right? So those life changes always trigger, in my opinion, the real estate changes. And even with the sales, you don't have to sell your house because your neighbor just sold it and got a fantastic price. Talk to your realtor about where would you go if you sold your home. Where would you go? And does it make sense for you to sell right now? All of us. I have so much anecdotal information about all the homeowners saying, "Oh my goodness, I would love to sell the home, the crazy good prices." But then what are you buying and where are you going? And let's have that conversation, because it's very important to understand the whole piece and the whole puzzle. What I've been talking to people about is a 2-year plan. Don't make decisions right away, but let's start planning ahead of time so that we can get you where you need to be when you're ready for it. Folks, this is Bella Vora. I talk about all things real estate. I could go on, but I'll stop here. And I would love to share with me what you thought was, crazy about this market report for this quarter, and love to share and exchange ideas. Take care. Find me on social media. Subscribe to my channel. Keep coming back for more. Bye.